Let's do this. Let's do this. Welcome to Apartment Shark Pool. I'm your host, Corneilous Cannon, one of the best places to find great deals and great investors. Now, tonight we have two presenters, and the presenters are going to present their deal opportunities to our platform, and we're going to actually go and evaluate each deal and try to get each deal funded. Now, as we go through the process, I do want you to put your questions in the chat and actually figure out how we can help the deal get funded. So as we begin the process, I want to introduce our sharks this evening, our person to present and so forth. First online, we have Vina, you there? And yourself?
I'm here. Hi.
Tell us about tell us who you are and how you can help.
Okay. Hi everybody. I'm Vehano Joseph. I'm the founder of Vive Funds. I'm based out of Dallas, Texas. I'm a large multifamily owner operator with a focus on Class B value add assets. And right now, my overall portfolio is somewhere around between 500 and 600 million across 3,000 doors. And I'm really excited because I'm an LP into a lot of deals. So I'm looking to place capital this year. And so I'm looking forward to hearing you guys present. Thanks for having me, Cornelius.
Outstanding. Thank you as well. Next, we have Jennifer. Jennifer, are you there?
Yes, I'm all here. Hi, everyone. Here, Jennifer, living in Austin, spent a lot of time in California. So I am an extended state operator and also developer of multifamilies. I have over $150 million on transactions, looking to double that portfolio this year and start hitting the $100 million to $1 billion. Yeah, I'm looking forward to connect with all of you guys.
Outstanding. Thank you, Jennifer. Next, we have Nick. Nick, you there?
Hey everybody, my name is Nick McGrew. I am the founder of Polymath Legal. We are a boutique real estate and business law firm. We do lots of syndications and funds. To date, we have assisted clients in syndications and or funds in totals over $1 billion in assets. And we see lots of deals. We help lots of clients fulfill their dreams and looking forward to see what you guys are going to present to us today.
Outstanding. Thank you, Nick. Now we have Alvin. Alvin, you there? Alvin, you muted.
Where did he go? I can't see him anymore.
I'm here.
Oh, there you are.
Can you hear me?
We hear you.
Okay, great. My name is Alvin Hope Johnson. I am a developer based in Dallas. Today we've got about 1,054 units of affordable housing, and we have about 750 units in development process right now. Ground up, high performance buildings. We're going to build 20,000 units in 5 years. I'm so glad to be here with you. Cornelius, thank you for allowing me to be a part.
No worries at all. Thank you for coming. Now you know about us. And the question is, we want to know more about you. So in a minute, you're going to get a poll real quick, ask us some questions about, first I want to know, why'd you come to this event? Why'd you come to this event? The poll's up. Did you come to this event because you're looking for deals? Are you looking for people with capital? Really not sure why you come to this event. Are you looking for that soulmate? Charles, try to get someone for Charles.
Yep, I'm here. I'm here.
No, I'm saying find that soulmate. All right, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, polls up, share results. So we got some people here looking for some deals. Some people actually looking for some capital. Some people actually we're not exactly sure what they here. It's not like a cool event. We got some people looking for some soulmate. We got a couple this time, so we may find some things. All right, now next question. Question is, how can you help people? As we understand in this industry, it's not about what you know. It's not about who you know. It's about who knows you. So how can you help other people? So in a poll, there are a couple questions for you. Okay, how can you help someone else? Could you help find properties? Can you help with secure capital? You realize how you can help, or you can help be that lost soulmate for somebody. All right. 5, 4, 3, 2, 1, 0. It's in the poll. All right, share results. Okay, let's see what we have here. We have a couple people can help find deals. People help you find capital. We have some people not sure how they can help. No problem at all. We do have networking later on, so feel free to network as well. And also we can help finance also outstanding. We can make this thing happen tonight. Now, next question. One more question. I want to know, would you see yourself a credit investor or not? Kind of question. Do you see yourself a credit investor or not? Simple question. If you don't know, you don't know. If you do know, you do know. All right. 5, 4, 3, 2, 1. All right, in the poll, so we have here, share results. So we got a mixture here. We got a couple of people not sharing. We got people who are credit investors, people not, and so forth. All right. So we got a good mix here. Outstanding. Now, one of the things I wanted before we begin our show, I kind of want to give a brief introduction to what we're trying to do here. And one of the things that we're working on is trying to make this a platform where the artists can invest in these deals. And one of the things that we may go about is actually doing mini funds. And I want to talk to you about mini funds for a brief second is Baudry. Baudry, let me make sure. Hold on a second. Baudry, can you hear yourself, Baudry? You there? Baudry?
Sorry, I thought I was talking and I realized I am. I still am not able to share my screen though. If you could
All right, hold on. Okay, gotcha.
co-host for a second.
No worries.
I promise I'll give it back to you.
Okay, I didn't know you wanted to do it. Okay, got you. Let's do it. All right, here we go. Try now.
Thank you. Oops. Okay, here we are. So thanks a lot, Cornelius. So what I wanted to do was just spend just 3 or 4 minutes talking about what a customizable fund is. A customizable fund is an innovation from a new platform called Divestor. And so most of you may know what a traditional fund is. What is a traditional fund? I mean, you can either invest in a deal at a time, or you could invest in a blind pool fund, which will invest in a wide range of assets. So what a customizable fund does, it allows you to select deals within a fund. It's one fund, but every investor has their own custom portfolio. And you'll be able to see in a regular fund, when you go, you'll see only fund level profits and losses, but here you'll be able to see deal level profits and losses. You can add and remove capital at any time, complete transparency, and all the depreciation flows through to you just like you're investing in a deal. Now, why would you want to invest in a customizable fund? It's a very simple question, really, and there's a very simple answer. If you were to invest in the stock market, let's say you have $100,000 to invest in the stock market. Would you put it in one deal, or would you put it in 10 different deals where you pick the deals and put $10,000 each, or 20 different deals at $5,000 each? Hey, I know there are the high rollers in the audience who say, I'm going to put $100,000 and find the next Tesla. Good luck. But most people prefer a diversified portfolio. So a customizable fund basically is our attempt to combine the best attributes of syndications and funds. In a blind pool fund, you cannot pick what you're choosing, what deals you want to invest in. Whereas in a customizable fund, you can pick each deal. And for example, you may be in Texas. You may already have enough exposure in Texas. You may want to do new construction. You really prefer a value add and a cash flow kind of a deal than a new construction. So how does the fund work? We work with a variety of sponsors, and these sponsors find attractive deals, and these deals are cut into slices. Literally cut into slices, right? I mean, the deals are anyway cut into slices. These are cut into smaller slices. You put the capital in the fund. Think of this like the Fidelity or Robinhood or TD Ameritrade of real estate. Is that funny? I didn't realize it, but that's okay. Thank you. Was it the TD Ameritrade which was funny, or the Fidelity which was funny? But anyway, I don't want to go there. So just like you would invest in a stock brokerage account, you would put the capital in the fund, and you select how much you want to invest in which deal. Like, for example, in the short pool platform, if you want to invest in a deal, but you don't feel comfortable putting the minimum 50 or 100 grand, you can put a lower minimum, whatever is determined by the sponsor. And there is no difference between investing in the deal directly and investing in the fund. The only disadvantage is you might pay a small fund management fee, but which is more than justified, because now you're putting a much smaller amount and you're building a diversified portfolio. And the best news is you get a single K1. So I don't know about you folks, but the only people who are happy about getting 20 different K1s at the end of the year is your accountant. And frankly, I don't think you and your accountant is that happy these days. I mean, nobody wants to deal with that much paperwork. So you get a pro rata share of the earnings and a pro rata share of the depreciation and appreciation. Everything flows through to you. You can withdraw the money as the deal exits, or you can reinvest in the fund. So one last slide, and then we'll go to the regularly scheduled agenda here. So what are some of the key benefits? The sponsor team evaluates and selects the best deals and puts them in the fund. Just to recap everything which I said, investors can customize their portfolio to align with their investment goals. You may want to invest in storage deals. You may want to invest in multifamily. You may want the Sunbelt, but you really want California. I don't know why you'd want that, but hey, everybody has their own choices. So you can invest in different states, time horizons, and asset classes. And it's very transparent. Just like you log into a stock brokerage account, you'll be able to log in and see how each individual slice is doing. You have the liquidity to withdraw the money when the deal exits. And all of this is packaged in one single nice LP structure where you get a single K1. I mean, it's just awesome. I mean, I used to invest in multiple deals. I just love the single K1. I don't want to deal with 20 different tax documents. So with that, thanks a lot, Cornelius, for allowing me to speak about customizable funds. At Avestor, we are trying to revolutionize how real estate investing is done. And we hope to partner with many of you, either as a sponsor or as an investor. Do reach out to me. Happy to answer any questions. I did put my information in the chat window. So thank you.
Well, thank you, there, Bardry. Yeah, so we're I wanted to say, because that's one of the platforms they make move towards. There's a lot of people to invest on our platform like that. So let's get this thing started, my people. Vehano, you ready?
Yeah, sure.
Outstanding. Let's see. Can you make sure you share your screen?
Yes, I can. Can you see my screen?
Yes. Hold on 1 second. Hold on 1 second, real quick. Jenna, you there? Hold on. Jenna, are you there? Jenna?
Oh yeah, I'm sorry. I was talking and no wonder why no one heard. Okay, so you have 15 minutes to present. 10 minutes into the presentation, you will hear a sound like this. Did you hear that?
Yes, I did.
Okay, then that means that you have 5 minutes left before your before the presentation needs to end.
Sure.
All right.
Okay.
All right. So
Okay.
whenever you're ready.
Ready. So hello, Sharks and Shark Pool Nation. Thanks for having me this evening. My name is Vehano Joseph. I'm the CEO of Dreamstone Investments. And tonight I'm going to be presenting a deal that we have under contract in San Antonio, Texas. So to get the legal stuff out the way, this is not a solicitation, and a private placement memorandum will be issued for you to invest in this deal. This is a 506c offering, and that's for accredited investors only. So Timber Hill Commons, 340 unit property, built in 2020, A-class in the Leon Valley pocket of San Antonio, Texas. This deal kind of came across to us at the end of Christmas, so it's kind of my Christmas present. We got under LOI in December 24th, and really opportune time buying straight from the developer of the property. The story here is this property has had a very aggressive lease-up program with the developer's capital partner being a REIT, and their exit is build it, sell it, lease it up, get out of it. So, it's advantageous for us. At Dreamstone, we've been focusing on a newer strategy of looking at deals that fit a pocket that we like for newer transactions. And the reason why we're looking towards the newer and even the ground up deals is just because of the cap rate compression and the forced the deal pressure in the Sunbelt right now. Our business plan, With that aggressive lease-up program that they had, we identified that this property has roughly, on average, about 250 average effective loss to lease, which we really like. We're looking on in our program to acquire properties of this nature that combine the perfect bones plus, which is newly constructed, which is low maintenance, and also with the $200 to $250 loss to lease. What we've noticed is with the tailwinds we have in the industry right now in multifamily, we have rents obviously going with inflation quite aggressively, especially in these areas that are undersupplied. And there are some low-hanging fruits at this property. We can juice the NOI with things like adding smart locks and thermostats to make it a more sophisticated resort-style living package, add electric car chargers, improve the management payroll costs due to them being in lease-up mode. They had a heavy payroll, so that's really easy to fall in, fall out kind of situation for payroll. And there's also NOI improvements in things like adding a well to improve irrigation. Some rent comps, we did a study of 12 properties, similar ages, not a lot of new product in San Antonio, which kind of gives us a little bit of an advantage right now. Now we know there's products coming online and in the pipeline. So we're basing our model on the future rents or our target rents of today, and we want to hit that in 3 years' time. So for our one beds, our average effective is 1,089, and we're targeting 1,300. The market already is doing $1,600.90 a square foot on the one bed. So we want to hit that in year 3. They have these rather unique 1-bedroom townhomes, which they just filled on the site plan, which I kind of like. And there's only 16 of them, but our target there is 1,400 to 1,600. The market's accepting that already, and these things stay full. We have 2 beds. We're taking from 1,425 up to 1,848. 1,800 for the 3 beds, 1,800 to 2,000. And then let's talk about San Antonio. The property is located in the Leon Valley area. What I like about it, it's sandwiched in between the medical corridor and Westover Hills. Westover Hills has over 30,000 employees and an approximate area of 88,000 employees in that area, with the medical corridor so boasting a ton of jobs and continued growth in that pocket. So we're seeing Methodist Healthcare announced that they're finalizing plans to build and develop a 100,000 square foot medical office. The NSA has indicated they will be adding 9,000 jobs in the future, which is great. And San Antonio has been a market that's been on our radar for a while now. 250,000 jobs added. Median income growth is strong, and the population growth has been phenomenal. Major employers, Methodist Healthcare, so that healthcare corridor, 12,000 employees. Chase, Citibank, Wells Fargo all have operational data centers or operational centers located in San Antonio. In a past life, I was a financial consultant, and I actually did a large project for Wells Fargo, and I actually went to this they call it Wells Fargo campus, and really great location and lots of good jobs out there. The military branch has over 40,000 jobs, and as noted earlier, the NSA is identifying about 9,000 additional. So the opportunity, 3 to 5 year hold, $100,000 minimum investment. We're targeting 8% pref with quarterly payments. Our target total project IRR is 20%. Target LP IRR is 15 to 17%. We're doing a 90-10 split. $10 million already committed of the $16 million LP check. We're anticipating a close date of 3/22. Here's some pictures of the interior. Again, looking at, would I buy a B or a C class property, or would I buy an A class at 202 a door in San Antonio? Good bones, good location, good economic drivers. So, we're leaning more towards the strategy. Sources and uses, senior debt, 56 million, GP equity, $2 million of own money, 16.4 million LP equity, total sources, 74.4 million, acquisition cost, 68.8, property reserve, 0.6, acquisition fees, 1.03 million, closing costs, 3.4 for the project. And then about our team. So Dreamstone Investments was co-founded by myself and Nick Contessa. We're based out of the Atlanta and Tampa Bay MSA. We have over 900 units owned and managed in Atlanta, Nashville, and Tampa. We are a multifamily firm focused on acquiring newer assets. One thing that we have done in the current year has been to get Verivest verified by an independent third party, which means they track your track record, they track your deals for compliance, they check all what you say is true. Make sure you're complying with your operating agreements. A little bit about our co-GP. We are co-GPing this with Arkin Capital. They're also based in Atlanta. They have about 3,500 units. They've done and managed over $500 million worth of transactions, and they have properties in Alabama all the way through the Carolinas. A little bit about us as a team. I'm originally from Cape Town, South Africa, if you've noticed the accent. I'm a chartered accountant by trade. Worked with Grant Thornton internationally for about 7 years, and transitioned into management finance consulting, where I did projects for Wells Fargo, Silicon Valley Bank, a $3 billion acquisition for Johnson & Johnson in Tampa, and I was director of private equity backed OBGYN company. So I've done over $5 billion worth of merger and acquisition activity, and applied that war room experience to multifamily real estate over the last 5 years. My partner, Nick Contessa, worked for a building company, Rockwell Solutions in Tampa. They did projects for Lennar and Meridian and all those home builders out there on the West Coast. He's managed over 800 projects, and he's our asset manager. Steve O'Brien, Arkin Capital, co-founder. Again, they have over $400 million worth of assets under management. Great. We've done several deals together, and we're have worked really well. Combined, all our deals have over 20% IRR returns. So contact information, you can contact me directly, Vehano at Dreamstone Invest, or go to our website, www.dreamstoneinvest.com. And if you have any questions or are interested in investing in this opportunity.
Outstanding, man. It's good. Thank you, man. Thank you so much. All right, now for the audience. Now is your turn. Now, before we begin, the first question I want to ask you is, how do you rate this deal? On a scale of 1 to 10, how do you rate this deal from your knowledge? Okay. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Yes, I will have the slides in the members area as well. If you look for the slide, this is my ethic question. So in polls, here's the results. The poll end, share results. So this is how they rate the people. That's how you are rate the first deal. Okay, you got some goods and so forth. Now, my second question to you is, if you could, how much would you invest in this deal if you could? Ready? 5, 4, 3, 2, 1, 0. And poll. We got some good, different share results. Gotcha. So we got some mixed results here. We got some people say yes. People so we got some more questions, so forth, and about it. Now as you, the minimum was I guess my estimate $100,000. And as you heard earlier, what we're trying to do is trying to figure out how you can allocate your funds thoroughly. So my question is, if we create a fund similar like what I said earlier, would you be interested in investing with Sharp Pool Capital in this deal? And just a simple question, yes or no. Are you ready to miss out? Simple question. That allows you to allocate your funds and invest with us in this deal. 5, 4, 3, 2, 1. All right, that's a bit. Thank you. All right, I got the information, so I will share with y'all. So now let's first go over to our charts. Vina, you ready? Okay, you first.
Hi. Hi, Vehano. Thank you so much for presenting this deal. I actually am very interested in this deal because it's a market I'm not in, but I really like this market, generally speaking. I have a bunch of questions. So Cornelius, I'm sorry I'm the first one going, but I'm actually interested in this, so I just need to get through a couple of things real quick. First and foremost, very well done presentation, but I missed a couple of things that I was waiting for. First, we can start with the numbers, right? The pro forma. I did not see a pro forma in there. Was that on screen at some point and I missed it?
No, that's something I can share with investors that want to, go further.
Okay, yeah, I'd love to look at that. Do you know what the entry cap on this is?
We're going in at a 4.8, 4.9.
A 4.9 cap?
Yeah.
Okay, and what's your exit cap assumption?
4.5. Market's at roughly around 3.25 right now.
So you're assuming a compression on the going in cap?
Well, where the market, we got a good discount on the property. We're seeing properties sell in this area for like 245, 235. So we're at 202 on this deal. So that's the in-place cap rate and the savings that we're modeling, right? Compared to our exit, which the market, the market for these types of products or A-class products are in the 3.2, 3.5. So we're modeling a more than 100 basis points exit.
Is your 4.9 adjusted for taxes and insurance?
Yes.
Okay. And then do you have a sensitivity analysis you can share?
Sure.
Okay, perfect. And then what's the cash on cash for like year one?
Pull that up. Sorry, I'm sharing my screen now. So oops. We are. What I could do is I could share that offline with you.
Okay.
Okay.
Yeah, so I guess what I'm really trying to ask too is, are you guys actually going to hit pref during your hold period? Is this a 5-year hold?
5, yeah, 3 to 5 year.
Okay, 3 to 5 year. Are you going to actually hit pref, or is that going to be accrued to?
It's going to be accrued in the first couple of years as we transition through the rent increase process.
Okay, and the current occupancy?
Currently, it's at 97%.
97%. Okay, and do you know your break-even occupancy?
It should be around 170 units.
So like 50%?
Yeah.
Okay.
I can get back to you on that.
Okay. Then a couple of other questions I had. You said you guys are going to push rents $250, and you're also going to implement like a smart home feature. Are you guys underwriting a smart, like, is that other income in addition to the $250 premium, or is it included in it? What are you guys assuming for your smart lock, smart home features?
We're doing $35, but also they charge an amenity package right now. The neighboring competitors are doing about $145 to $150 for that amenity package, which includes smart home, package lockers, etc. And their current pricing is at $100 a unit. So we think we can easily get that for 35 to 45 to just be under the rest of the competitors.
So is that $250 premium, like the delta to market, is that
rent
including that, or with
no, that's just base rent.
Okay. You guys have already done like an amenity audit of comps?
Yes.
Okay, perfect. And then how much current staff do you guys have How much is on the
allocated.
T12? I know how much is on the T12 and what are you going to?
So we're going from, they have 14, sorry, 4 inside, 4 outside.
Okay.
So we're,
What
plus
do
they
you-
had a regional.
And the
plus they
regional's
had
on the payroll, the regional's on the T12?
Yes, yes. And so they cost per unit, per unit was about $1,600. And we're gonna bring that down to about $1,250, $1,300.
Have you guys
What-
operated at this market before?
This is our first market, first time in San Antonio, but we've been best in final on probably like 5 or 6 of these deals. So yeah, we've built out the team.
What do you
We have
guys
some-
do on your payroll for your other assets in similar markets?
In Atlanta, we're about 1,100 to 1,200.
Okay. Are those class A also?
B plus, class A, A minus, yeah.
Okay. And then, sorry, Cornelius, I just have a few more questions. I promise I'm almost done. On your post renovated rent comps, I don't think you had mentioned, I saw that there's like growth in the demographic, but what's the average median income of like the 1, 3, 5 mile radius?
Yeah, so it's about 52,000, but I can get you the 1.5. I didn't include that in my presentation for,
It's
for
50,
tonight.
sorry.
52,000 average household income.
Okay, hold on. I just
Hey,
want to-
Vehano, when you get a chance, you email me, I can email it to all the sharks when you get a chance, okay?
Sure.
What do you guys use for your rent qualifier to get tenants? 3 or 3.5x for income?
3.
Okay, so my question is on your rent comps, right? You're taking the majority, I think 180 units are 1 bedroom, 1 bathroom. And you guys are
Mhm.
taking that up to 1312 over 3 years. But your average median income right now is at 52,000, which if you're using 3x, that would give you 1444 to have qualified traffic, right? Is your 3 mile or 5 mile radius higher?
Right. Yes, that's right.
Do you know what the 3 or 5 mile radius is?
I can provide it to you. So
Okay.
that's
Yeah, because I think some of your 3 bedrooms are going up to 2,000
right.
a month. So you're going to need $72,000 of income just to qualify for those rents. So I have a little bit of a concern around that specifically. I don't love the unit mix, but a lot of new developers are doing a lot
Yeah,
more
can
1
do.
bedrooms right now because costs are very high. Then my last questions are just around the sponsor and the structure of the deal. So from a structure standpoint, so it's 8% pref, 15 to 17%. Is that IRR or AAR?
Target IRR.
IRR, and that's investor level, right?
Yes.
Okay, and then you guys are doing a 90-10 split, and
Mhm.
you have 10 million of committed capital. How much is the total equity you need?
16.
16. Okay, and you guys are putting in 2.
Yes.
So you need 6 more or 4 more?
6 more.
6 more. Okay, and then who's the other 8?
We have a family office that we've done.
Okay.
Yeah.
Okay, and are each of the sponsors investing or only some of the sponsors?
Yeah, we're all investing as a whole.
Okay, and what's your acquisition fee?
We're at 103 or 1.5%,
1.5%. What's the dollars? What's absolute dollars?
1,033,000.
Okay, so you guys are investing above your AC fee or your,
Yes.
what about your financing fee?
We don't charge a financing fee.
Okay, so you guys are putting in dollars above and beyond your fees?
Yes.
Okay, I really like that. And then my last question around the property manager and asset manager. So your property manager and your asset manager are both the same, like your co-sponsors, is that right?
No, so we're our asset manager. We're gonna co-GP that, so Arkin Capital and Dreamstone. We're
Okay.
using Tarantino to be our property manager on the ground.
Okay,
We do have some partners that live in the Houston submarket and for our boots on the ground from an engineering standpoint and construction
Okay.
standpoint.
okay, and so you're the only 2 co-sponsors on this deal?
Yes.
And who makes the decisions on when to buy, sell, major decisions?
So as that carve out on the LP, we have a certain terms on that. So if it's obviously mutually beneficial to all parties to sell, we vote on it from a GP standpoint.
What do you mean carve out on the LP?
Well, no, I mean, so between Arkin and Dreamstone, we'll vote to see what the best strategy is.
So are you guys like equal partners?
Yes.
So what happens if one of you wants to sell and the other one doesn't?
Yeah, it's a good question. So we have provisions in our operating agreement that we have a mediator or a third party, which is our attorney, that can help us get to that resolution.
Okay, and so who's like I guess who's the lead sponsor? Are you guys complete co-sponsors, or is there a lead? Are they the lead and you guys are co-sponsoring, or?
Yes, so they're the lead because I've $500 million worth of assets, and we found the deal, put it together, and they're signing on the loan with us, the carve-outs and all that stuff.
Okay. Can I just say I totally love that you guys got involved in the deal like that. I think that's phenomenal. So my overall feedback is I think there's a lot of information that I'm still missing to make a decision. And I'll tell you, I know it sounds like I'm being like totally harsh on you, but I'm asking you these questions because I'm actually very interested in this deal. So I'd love for you to send me, all the information that I'd asked for. Would love to look at that. How soon are you looking to raise the rest of this capital?
As soon as possible. we're closing in March 22nd.
Okay, March 27th. Perfect. Yeah, if you don't mind sending that to me, I would really
absolutely
look at it a little bit deeper. And then I will know maybe in the next week or so, I'll talk to our financial people and see if we can allocate capital if the deal works. So I just want to check it out a little bit more, but I think the presentation is really beautiful. You did a great job with that. I think, knowing your numbers is really, really important, especially some of these questions that you should know them off the top of your head. But totally understand you're under a little bit of pressure here. So would love to see more info on that. Thank you.
Thank you, Vina.
Thank you.
All right, next you have Alvin. You there, Alvin?
Yes, sir, I'm here. Thank you. Vehano, very, very good presentation. My questions are not near as taxing. Couple of questions. Well, Vina got all the hard ones out of the way. So
No, it's all good. It's all good. I'm used to it.
Mine are really simple. So I heard the push on rents, $250. My concern was around the same thing that Vina said about the income gap. You've got a 3X qualifier. Do you have any workaround with that?
Yeah, so that's the average median income where we're already seeing them trade out today at that level. So this isn't us starting that. They've already have leases, qualified leases at $250, $270 more than target. So we're not coming and being the market leader here. It's more of, follow the plan, execute based on current, lease trade outs. So yeah, we're not going to lower our standards to get people in. I mean, that's kind of why there's such a gap there today. I think with the population growth in San Antonio and the people moving there, the job centers bringing more qualified people into the area will give us a plethora of people to choose from. So I'm not concerned about having the lack of qualified people, if that makes sense.
Okay, sounds good. I had one additional question about the accrual of the pref.
Yes.
A lot of investors don't like that, but what happens in the event that we do not continue to see a compression of cap rates? How do you make up that pref that's being accrued?
Yeah, I mean, so ultimately the layer of the pref is taken out first, right? So regardless of the sale event or the exit event, so we've stressed this deal 5, 10, 50 basis points below and above the current exit. And we feel that it's a compelling deal, 202 a door in San Antonio for a new property, I think feels right to me. It feels right for the market. We're not like here in Atlanta, I'm paying 240, 250 for a 1970s product in Decatur, right? So
You shouldn't be doing that, by the way. I'm sorry.
Right. But that's the lunacy that's going on. So, we're looking at these strategies, and it makes sense. And if we have to hold it longer than 3 years, 5 years, then we hold it, and the rents will appreciate.
Okay. Thank you, man. That's all the questions I had. Really great presentation.
Nice to meet you, Alvin. Yeah.
Yes, sir. My pleasure.
Thank you, Alvin. Thank you, Alvin. Mr. Nick, you ready?
Do it. Great presentation, Vehano. Beautiful property. I too am not going to have as many sharky questions as Vina had, but I do have a couple for you. So my first one is, tell me, what are your specific concerns you're having about this deal? Not just general, whether people will pay rent or something like that, but what are some specific concerns that are specific to this deal that you have about it?
I think, in my nature of being an auditor in my past life, we look at risks and what mitigates those risks. We've evaluated all those risks at this property, from, tenant qualifications and lease up. We're seeing more opportunities than risks by this being such a fast lease up process, and by these investors, the previous owner, developer, not wanting to hold the property. Now, obviously, there is the potential concern of the market going soft and all that, those kinds of things, where we're potentially not hitting our rent target. That's why we, and to mitigate that, we're not relying on that to be year 1 or year 2 or anything like that. We're pacing it out over a 3-year period to what is already being achieved in the market today. And that for me is always it makes me sleep better at night, because I know, okay, at least the market's somewhat close to that, and I'm trading the higher end properties. Does that answer your question?
Somewhat. What are some of those specific risks that you kind of were evaluating and you found some mitigations for?
Well, I mean, so some of the risks are, of new construction is, did they build it to a good standard? Did they, buying something from someone else? We did this in Nashville. We acquired a property pad on the first pad, right? So we bought the construction, the deal out, before they completed it. And the risky part of that is making sure they keep to their standards. And, when you buy something like a B class or C class, you don't know how they built it and whatever. So you can only see the outside. So of course that risk is always there. I had my engineering team go out, evaluate, foundations, things, opportunities that we can, where there are opportunities or where there's risks, and thankfully, so there's not any significant risks around structural or anything like that.
Okay. Did the developer offer warranties?
So we're outside of the warranty now, so it's just like you would buy any property.
Okay.
It's 2022, so normally it's like a year.
Okay. I also kind of echo some of the concern that Alvin and Vina brought up regarding the income, and then for me, it's also tied to the unit mix as well. And I know this had a time crunch, but do you have a demographic information that kind of helps you support the? My concern was that I saw a lot of. It looks like you have a large percentage of one bedroom and studios, and so you have demographic information that helps support that unit mix.
Yeah, I can share
that. Okay. Let's see what other questions I have that were not asked. Well, I've got Vina the Shark, forgot a few, so I've got one from her. She wants to know if there were any concessions on the T12.
Yeah, so they had concessions before in the original lease up, but in the last, I would say last 3 months, we have not seen any concessions given on these lease trade outs. They've been really strong, which is good sign for us to it's kind of the boring real estate, right? I'm looking for stuff more predictable, more stable.
All right, so yeah, I think, like I said, I think the property is beautiful. It's definitely a market that is interesting to me. There are a few more more information I don't want to know, but again, I understand that we had a brief presentation here. But overall, I think it's a solid presentation and nice looking property.
Outstanding. Thanks so much. Thank you so much. Jennifer, you ready?
Yes, sir. Thank you. So Vehano, thank you for that presentation. I agree with the guys. Amazing property, beautiful property. Since a lot of the people have asked you a lot about the technical stuff on how to evaluate the numbers, I'm gonna go heavy on the pitch. Presentation wise, a lot of recommendations. First of all, you have a strong market, you're not tapping onto that market. If you open in the way that you did, it's completely boring to me. And this is an exciting project in a high demand market. So for example, you can say something like high demand multifamily with X% of vacancy in the market, right? Right there, you're telling me it's a high demand market. We have an opportunity to increase rents, or this is exactly what we are planning to do to increase the performance, right? You got into the property itself. That doesn't get me excited. I get excited about numbers, and you didn't give me enough numbers in regards to how the property might perform, as Venus says, from 1 to 5 years. I didn't see any exit strategy. When I'm an investor, I'm looking at how much money I'm going to make on this, who is behind, what is the projections, how the numbers look like, and what is the opportunity when they get rid of this property, on getting that money. I didn't know how much, when I was going to get paid. And all the questions that they ask you, you can integrate that in 2 or 3 slides and highlight that pretty quickly for us to understand this is the deal, right? So it allows us to make decisions pretty quickly. If you can integrate the problem of what you are solving, high demand market, if you can later talk about the opportunity that you have, not only in the property to increase the performance of the property, but also the opportunity on the market itself, then you're telling me what's the problem. And then tell me your team has over $5 billion in experiences with growing businesses, acquiring businesses, managing assets from A to B less. I want to hear that, because I'm like, okay, this is the people behind this that will make this plan happen. And I never saw your underwriting criteria on how do you select this property and why this property was so awesome beyond all of these other properties. And I don't have an idea where is Leon Valley. I just know now that Leon Valley, apparently it's a high-end place that serves the medical industry and the employees, and maybe Chase and Wells Fargo. As Nick said, if that's your avatar for that 1 bedroom, use that in your presentation. Tell me who are you going to be serving, because even if I don't like the 1 bedroom kind of mister, if the demand is there for that kind of professionals, I want to know that. And I never heard any of that. So you use a lot of adjectives too, but there was no data sustaining the adjective, right? I don't know what unique means. Tell me what is unique with numbers. I'm an investor. Tell me what awesome property it is with numbers. And then you will get me hooked to want to know more. Just sharing some about the pitch.
Okay, appreciate it.
Outstanding. Now, real quick, put your chat, Vehano. I will email everybody out the information that reach out to you and so forth. Thank you again. Before we go to our next presenter, can we get one picture for the Facebook social media? Can we turn the cameras on real quick? Can I get a quick selfie for social media? Right? We gotta do it for social media. Do it for the Vine. So please feel free to do as well. Tag your friends, tag yourself, tag me if we're friends well, right? 1, 2, 3. Yes, sir. Outstanding. Thank you all. Take your own pictures, please to share. You got some of y'all have a couple questions, but I'm gonna go to the next person. So ask questions. Vehano will be around, and he also will be in the chat later on, so you talk to him directly. Next, we have Eric. You there, Eric? Eric, you there?
Can you hear me now?
I can hear you now. Yeah, we got you.
There we go. Sorry, my mute button didn't work for whatever reason.
Are you able to share your screen by any chance? You ready?
Hang on, let me share my screen. I want to make sure you can see it.
Man, we can see it.
Cool.
All right. Jenna, you there, Jenna?
I sure am.
Let's rock and roll. Johnny, you want to give your brief?
Yes. Okay. So you will have 15 minutes to present your deal. 10 minutes into the deal, you will hear an alarm or a sound that sounds like this. And that means you have 5 more minutes to present your deal. Any questions?
No, thank you.
All right.
Let's rock and roll. Go ahead. It's on you.
Thanks. Well, first of all, thanks Cornelius for having me on here today, and look forward to talking to all you sharks, and appreciate the opportunity to present. My name is Eric Bodiwala. I'm one of the managing partners at Elevate Commercial Investment Group. A lot of you may know my partner, George Brew. He's on the call today, and he's going to be answering questions for you guys in the chat if you guys have them. So anyway, this is our newest investment. It's in Mesquite, Texas, which is a suburb of DFW. It's 190 units. And obviously, as a disclosure, this is a 506c offering, so we'll get that out of the way. So we'll jump into the sponsor team. So like I said, my name is Eric. I'm one of the co-founders of Elevate. George and I have acquired roughly 5,000 units in 5 different states. We just closed on another 226 units today in South Carolina, actually yesterday. So we're in Texas, Oklahoma, South Dakota, Georgia, and South Carolina. Last year we sold about 1,300 units in Houston and in the Dallas area, and in heavy acquisition mode. So this is some of the sponsor team here. So I already talked about George and myself. We have Ash, who we partnered with on another deal in Houston, Texas. It's 180 units. He's got a ton of experience in the multifamily space and also in commercial and retail. And then for those of you that watch, that like flipping houses and like to watch HGTV, we're actually partnering with the guy from Flipper Flop, Tarek El Moussa, and his team. So we're real excited to have him on board, and he's going to be raising equity for us, and kind of bringing his knowledge to the table. And then myself and George are going to be handling really most of the asset management alongside with Ash Shaw. So pretty good team, a lot of experience on this team, and we're excited to do this deal together. So this is just kind of an outlook of some of the properties that we currently own. We just closed on a Class A building in Weatherford, Texas in December. That was about an $80 million purchase, 396 units. We bought the Graham in November of last year. Story Hill, so this is Class A, this is Class C. Story Hill is another Class C apartment building, 0% occupied, $4 million in renovations we're going to be putting in there. And then this is a deal we closed last year, 850 units that we're turning into affordable housing. So we kind of do a little bit of everything. Talking really about the Story Hill deal, we have a construction company in-house, so we really understand construction, and we've been in the business for 15 years in the real estate business. So started in the single family space, obviously had the construction company, and then have been in the multifamily space for about 4 years now. So we can really handle anything when it comes to a construction standpoint, and we feel very comfortable there. These are some of our sold properties that we've sold over the last couple of years, and I already talked about those. It was a 5-unit portfolio in Houston that we sold. It went for just under $100 million, and then we sold our first deal ever, which is 37 units in Temple, Texas. So just to give you kind of an outlook as to some of the things that we do and what we've done, and what we hope to do. So here for Town East, these are really the investor level returns and what you can expect on this deal. We have a 6% preferred return. It's a 70-30 split. Once we hit a 18% IRR hurdle, then that goes to 50-50. You're looking at an 8 to 9% cash on cash and a 2 to 2.2 equity multiple. So for those of you that maybe have not invested in multifamily before, I like to kind of keep it easy. The money you put in, if you invest in $100 grand, you get $200,000 back over a 3 to 5 year term. Obviously every deal that we do, we always say that we're getting into kind of a short-term marriage, which with all of our investors. So we always expect, we always let people know that they're going to be in a deal for at least 5 years. So we're projecting a 22 to 24% IRR, and the minimum investment on this deal is $75,000. So I talked about this already. It's 190 units. It's built in 1959. The one thing that surprised me big time about this deal is that it's in super great condition for being built in 1959. I mean, we've walked some 1980 assets that, you know, quite frankly, look like hell and were pretty rough. So we're getting a preferred equity partner to bring in $5 million on this deal. Obviously, that helps us with the leverage and not having to raise as much equity up front. We're paying 11% interest on that, you know, all in rate. And that'll help give more upside to the LPs and the GPs. This deal was sourced off market. We were friends with a broker. He came to us. The deal was actually under contract for $105,000 a door originally. And, you know, the other buyer couldn't raise the equity. So the broker contacted us and said, hey, you know, he's tired of dealing with, you know, people that can't close. Can you guys do it? And we said, sure, but we need it at this price. And we were able to get it for $90,000 a door, 17.1 million. You know, we are buying it at just above a 6 cap, which is really unheard of in this market. For those of you that know DFW, it sounded like there was a lot of you in the Dallas area on the Zoom call. And then we're underwriting that we can exit, you know, about a 5.75 cap, you know, within 5 years. Kind of crazy. You know, we feel really blessed to have this opportunity because, as most of you know, DFW is one of the hottest markets in the country and things are expensive right now. You know, there's things trading in the low 5s and starting to go into the 4s. So it's a little, it's getting pricey. So just a couple highlights over here. Mesquite single family home sales prices went up 23% from 1 year ago. It's crazy. You know, some places in DFW are experiencing 15% rent growth. I know I live here in Uptown Dallas, so I'm 15 minutes away from the building. And Georgia's 15 minutes east of the building. So, you know, it's centrally located for us and in our backyard. Town East Apartments is located off of all the major highways in Mesquite, Texas. It's actually on a good location off of I-30 and 635. We're going to be, so as far as the financing, this is actually a loan assumption deal. We're going to be assuming the existing Fannie Mae loan. It's got about 10 years left on it. It was taken out in 2019, and the balance will be roughly almost 11.3 once we take it over, and it's a 3.41% rate. So excited about that. These are just some of the property photos. As you can see, the current owner did some exterior painting. He took care of all the deferred maintenance, roofs, ACs, all the major stuff. You know, we'll come in and update the signage. The signage is terrible. Come in and probably paint it, give it a little bit better of a scheme. There's 3 phases on this property, so they look slightly different, but we're going to come in and you know, update it a little bit. Make it look uniform. And then this is the units on the inside. So the units are basically classic on the inside. They haven't really done much other than update, you know, wood floors, put in black appliances and paint. You know, they didn't do any new hardware, no new lighting fixtures, none of that. So we feel like there's tons of opportunity there as from a value add perspective. As far as location, the population in Mesquite's 140,000 people. That was in 2019. Making it the 22nd most populous city in the state of Texas. You know, if you know Dallas, Mesquite is a staple suburb here in DFW. You know, Mesquite, Garland, Richardson, Plano, everybody knows Mesquite. I mean, it's a great area. I'll move on here. So it was rated one of the 25 best places to live, and it's affordable, right? This is really a C-class asset that, you know, it's mainly a Hispanic demographic, working class people. You know, and people that pay their rent on time for the most part, not a lot of high delinquency. You know, Mesquite is made up of a lot of renters, 41%, which we think is, you know, pretty beneficial for us. Every single comp in the area is, you know, 95% occupied and above. Honestly, on average, about 97, 98%. And then in 2020, there was an 8.6 increase in average apartment rent, you know, in the DFW, you know, Mesquite area. You know, obviously this isn't sustainable over a long period of time. We did a, you know, conservative underwriting and did that at 3 to 5% rent growth. So I'm located right here in Dallas. This is where the apartment building is here. And then my partner George lives right here on the east side of the lake. So this is in our backyard and our office is right here off of 635. So excited about it being so close to us. Looks like I got about 5 minutes left. So let me try to hurry through here. But let's see. So just some of the things that are happening in Mesquite. They actually have a you know, logistics airport that they're building now. There's warehousing. There's a new Class A industrial development going on in Mesquite. And look, Mesquite is one of the most growing cities in DFW. things are always happening there, and we're excited about that. You know, and obviously the rent growth and the opportunity that we have there. Some of the major employers: AT&T, Walmart, Target, United Healthcare Group, State Farm, UPS, Lowe's, Starbucks, PepsiCo. These are all located within, you know, a couple miles of the building. So those are always, you know, important to us. You know, again, for those of you who know, the Dallas, you know, Mesquite is as good as it gets. These are some of the rent comparables that we have here, and kind of current market and pro forma. You know, so we are expecting, you know, somewhere around $150, $160 rent bump on average. You know, for the apartment building with the upgrades. The current owner, he's actually an ex-NFL coach. They're actually a very good operator, and they were able to raise rents, you know, just by doing minimal updates and you know, improving the property on the exterior. But if you're looking at the comps, this basically shows you 1 bedrooms and 2 bedrooms, and these different colors are the different comps. And then us, this is here, us in the green, and then you know, current, and this is what we think pro forma is going to be. So a lot of upside there for the renovated units. And like I said, you know, after we walked all 190 units doing due diligence last week, you know, I was pleasantly surprised. I actually got more excited about this deal after I walked all the units, because I could see all the upside that there still is there. And let me tell you, the demand is there. All the comps, when we went to go shop all the comps, I mean, all these comps either have broken pools, broken clubhouses, everything is broken. You know, it's, you know, there's just a lot of opportunity, you know, for us to increase, you know, the value here, especially, you know, with the type of work that we do as operators. I talked about this already. Town East was sourced off market. There's comps in the area selling for 120 grand a door right now. Actually, there's another one called Park Ridge. It's a little bit newer of an asset, built in 1983. We actually know the owner there. He's asking $143,000 a door right now. Talked about the cap rates already, so I won't really go into that. This is some of our pro forma. Happy to share this with everybody in case anybody's interested, but obviously don't have time to go through any of that. This is for a sample 100K investment. Also happy to share this with everybody, but wanted to talk about depreciation. Depreciation is huge. Not only are you making 2x on your money over 5 years, but we do a cost seg study on every single deal. We use Madison specs. So for example, if you invested $100,000, you would get $104,000 in accelerated depreciation in year 1, which is massive. And the reason that we're getting above 100% is because our preferred equity partner that is investing the $5 million is not taking depreciation, and they're passing that on to us, which we then pass on to all of our LPs. So we've actually, this is the second time we're going to be able to do this. We did this actually on the Lone Oak deal that we closed in Weatherford. And that was tremendous. I mean, for 100,000, people got $136,000 in depreciation. So we're excited to be doing this again and providing these benefits to our investors. These are some of the, well, actually, I forgot to mention that we're going to be getting a supplemental loan here in year 3, which, you know, actually helps us with the leverage on the front end and doesn't allow, and allows us to not have to come in with more equity. But these are the terms on a loan assumption. About 11.3 million left on the loan, 3.41% interest rate. And like I said, it's got about 10 years left on the loan. These are the terms of the supplemental loan. So we're thinking about 5.8 million at 5%. These are some of our sources and uses. Actually, I found that there was an error here because our purchase price is actually 17.1 million. This acquisition fee is actually incorrect because we're taking a 2% acquisition fee. We have I believe it's a 1.5% asset management fee built in, and that's kind of typical. Normally, we're taking about a 1 to 1.5%. Sorry, a 1 to 2% acquisition fee and between a 1 to 2% asset management fee. It just depends on the deal, and a lot of times our preferred equity partner regulates on what we can take regardless. So, okay, so I guess talked about, well, CapEx. As far as CapEx, I think I got about a minute left, so I'm going to go through that really quick. You know, we're looking at putting in about $5,000 a door. Those upgrades, you know, being that the units are pretty much classic, is going to be updated flooring, resurfaced counters, paint cabinets, new hardware, new lighting, new ceiling fans. They don't have ceiling fans right now currently. Resurfaced countertops, resurfaced tubs, and just make it look good. The units don't look very good right now. From the outside, the property looks pretty good. On the inside, it doesn't look very good. I already kind of talked about the exterior plan a little bit. You know, we're very good with that type of stuff. We have a designer that we'll use to you know, come up with a color scheme for the property. So we're excited about it. These are again some different pictures. Project timeline, we're closing March 24th. We do have an extension built in for 30 days, but we expect to close March 24th. We collect all of our investors. We have a CRM, it's called Syndication Pro. That's where you can sign your docs, review the PPM, send in your wire. We do distributions via ACH or check through Syndication Pro. And everything is done on a quarterly basis, but we provide monthly updates as often as possible, especially when we take over a property. I believe George put my contact information in the contact spreadsheet. Sorry, that's my alarm clock, and I think my time is up.
Outstanding, outstanding. Thank you so much. We made it. Now
Yeah,
first, you made it. We made good time. So 190 units. Now first, to the audience, to the Shark Pool Nation, here we go. The first question I want to ask you, here come the polls. How do you rate this deal? That's your question. Your polls up. How do you rate this deal? Oh, sweet cherry pie. Are you how do you want to rate this deal? On a scale of 1 to 10. Okay. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Polls over. Let's share results. We got some sweet cherry pies. We got some 7s. We got some 5s. We got some 7. We got some mixed views. So good job. All right. So now let's stop there. Now my second question is, if you could invest in this deal, how much would you invest? Okay, let's go. 5, 4, 3, 2, 1, 0. And in the poll, bam, in the polls, share our results. Gotcha. So now the same question as before as earlier. As we trying to create this investor model, we want to know from you, if you had an opportunity to come in this deal, invest with us through a different portal, but invest in the deal, would you be interested? So let me know. If you're interested, invest in the portal. If you didn't want to put the whole $100,000 in, or you want to allocate your funds, would you be interested in doing so with us? That's the question. 5, 4, 3, 2, 1. Okay, we got 30 y'all about to say yes. Okay, that sounds good. And poll, we reach out to you all. Gotcha. Now to our shark panel. Vina, you ready?
You want me to go first again?
I mean,
I will.
Who else want to go first? Somebody else want to go first?
Like, please, no, not her first. Let everyone else go. I'm happy to go first.
Right.
Okay.
Go ahead.
Okay, so I have some questions here. Okay, so I'm in Dallas actually, so I do know Mesquite fairly well. This is a 1959 year of construction. Now, correct me if I'm wrong, but your team is very strong with construction, new dev construction, right?
Yes, we do. I mean, we've done it all, right? Multifamily, commercial, retail. We do new development for multifamily. Yeah, I mean, it surprises me how many people get in this business and their construction experience is not very good. So I feel like we excel. It's actually what helped us get into business originally.
Okay, I'm one of those people that doesn't have a construction background, but I'm in this business, so I leave it to the professionals to do it.
Absolutely.
But I think too, and I want to just address a couple of the questions that were also in the comments, because I've been getting DMs asking me, well, this waterfall is really aggressive to investors. Investors aren't going to make that much money. Listen, I am an investor that I want to make money on my money. So I don't care if my sponsor makes a boatload of money on this deal. I hope they do, because that means I'm making a lot of money. So to address all the people that ask me about the structure, I have zero issues with it. If you're making me money, you should make money too. There's enough to go around. So, and I saw that, George, you answered one of my questions is the 22% investor level or deal level? So you guys you have an $11.5 million loan, $6 million in pref equity. That takes you above
5 million.
I thought it said 5.8.
The preferred equity is 5 million. Actually, sorry. So we actually got the term sheet today. It's actually going to be 5.5 million. So yeah, it is closer to 5.8.
Okay. So that's putting how much capital are you guys raising?
On our end, about 3.5.
3.5. And what
Yeah,
is
so
that?
that's just gonna be LP equity, so 3.5 million.
Okay, and what are the terms on your pref equity in terms of like, do they have a minimum multiplier, equity multiple?
No, it's actually a fixed rate, 11%, 6% current, 5% accrual.
5% accrual and no minimum multiplier. You can knock them out in a year.
Yeah.
Okay. And then what about as far as, okay, so you didn't really talk to me a lot about the pro forma numbers. You skipped that slide very quickly, and that's what I really want to look at. What are your assumptions in terms of rent growth?
Let's see here. Let's pull it up. So we have 3% across the board, actually.
3%. Okay, I love
Yep.
that.
Yeah, because look, I mean, over the last year or two, I mean, DFW's experienced 10 to 15% rent growth, and we all know that's not sustainable, right? And we like to be conservative, especially when we go to our preferred equity. I mean, they chop us up big time, so they look at these performance and say, look, this isn't realistic, right? So they're going to be the biggest check writer. So yeah, 3% is what we have.
Okay, yep, I love that. And then as far as your renovations, you're going to put in about $5K a door, is that right?
Correct.
Okay,
Yeah.
and then what is the premium you expect on those units?
Premiums are going to be anywhere, on average, probably about $100.
That's all you assumed on your pro forma?
Correct.
Okay, and then what happens if you exit at a 6 cap or higher? Do you know the sensitivity on it?
I don't, but I could get you the answer to that question.
Okay, yes, I'd love to see that. Okay, so really I want to look at the pro forma sheet more.
Absolutely.
I think the most important as an investor is seeing what your actual plans are here. I also will say that this is not a deal that I would normally ever consider for my portfolio, mainly because I already own and operate in Dallas, 1. And 2, I don't personally love Mesquite as a submarket, but I care a lot right now about the sponsor team on any deal. I care about it more than any other metric I look at when I'm investing, and I need to place significant capital. I love that you got the pref equity group to give you 100% of the bonus depreciation, and you're allocating that to your investors. Because of that, this is a deal like I definitely want to look at. I would like to see more about it. George and I are already connected. So George, Eric, whichever one of you, I'm happy to connect with you guys offline. I'd love to look at it further. I think that just for anybody else listening, one of the things that is really important is I would normally never invest into a 1959 build. It's just not in my personal wheelhouse, but the sponsor team's strength is really mitigating the risk for me in that. And especially given your guys' background in construction and being able to probably very cost effectively and efficiently manage any kind of concerns that come up. The average median income is actually pretty strong compared to what your post-renovated rents are. So I really like that.
Yes, 65,000, yeah.
Yeah, I think that this is overall, I think it's good. I'd like to see the sensitivity because I personally don't like to underwrite to cap rate compression, but I'm also buying deals at like basically 0 cap at this point. So I don't have a choice.
Class A world, yes.
Yeah, I'm like in the B plus space, but I think that this is definitely a deal I would look at because of those other, the je ne sais quoi, if you will, of the deal. So I appreciate you presenting this. Thank you. Next time on your presentation, start with the pro forma. Give me the numbers first. I don't care about anything else until I see the numbers.
I will. Yeah, everyone's looking for something different, and I, obviously 15 minutes went by fast, and I talk pretty fast, but
it does. I was in your seat like not that long ago, so I didn't know it was 15 minutes when I came in, so I totally get it. But start with the numbers. Anybody presenting here, start with the numbers, please, because I think that is where every investor is going to start looking.
Absolutely.
George wants to speak. Cornelius, can you unmute George? He wants to probably like smack me down a little bit here. George, what do you want, George?
Hold on. I'm trying to keep in order first. So hold on. Let me
By the way, Vina, we did so because of the complicated structure with this deal, we actually got a third-party underwriter to help us with the underwriting here. So it's pretty thorough. So we'll send it to you.
all right. I get George a minute. Let me go Alvin real quick.
Wait 1 second, Cornelius, before go off. I'd really consider investing this deal if you guys sell me some of your Georgia and South Carolina product too. So I'm just saying. No,
Ah,
I'm
well,
just
South Carolina, we just closed today, so.
Okay, so you're
We're
probably
cool
not
there.
offloading that. Well, congratulations on that close. And also in the future, if you guys are looking for pref checks, especially in that like 1 to 5 million range, like
Mhm.
this is a deal we would definitely have put in a pref check of 1 to 5. So
Nice. Well, that's good because not many prep shops want to do less than 5 million. So that's very good to know.
right, that's why we want to play in that space, because we'll do that smaller check that
Yeah, honestly, there's like nobody playing in that space. I mean,
I know.
it's hard to find that. So that's good. That's awesome.
All right,
Yeah.
go ahead, George. Yeah, go ahead, George.
Yeah, I was going to be quick. I was just going to say, as far as the age, I did want to mention, I'm not sure if Eric did, but they've got all new electrical and all new HVAC in
Okay,
first
Yeah.
2 phases. So,
I love that.
that was one thing that I really liked. Like that work was done, we checked it, it's legit. So that helps.
I love that. Well, I appreciate it. I think that you guys are great sponsors with experience to actually execute, which is the most risk for me in any deal. So definitely want to look at this more. Thank you guys.
Awesome.
Yeah, thanks, Vina. Appreciate your feedback and questions.
All right, Mr. Alvin, you there? I think you said muted. Go ahead. You good? Try now.
It's unmuted now. Thank you. Hey, Eric, great presentation.
Thanks.
George, great backup, man. I only have a couple of concerns, but you guys been in the construction business, have really, really helped mitigate that for me. But I'm looking at 11.4 purchase price, 5 million pref equity, 5.8 million supplemental, $3.5 million equity, total stack 26 million. That puts you over 136,000 a door for a 59 bill project.
The supplemental is year 3. That we're not taking that on the front end.
So that's year 3.
Correct.
Right.
Okay. But that's still added to the stack, right? You still
No, it's going to wipe out.
How will it wipe out?
We're going to pay back equity.
Mhm.
You're gonna pay off.
We're going to take that money and give it back to the investors.
I got it. Vina answered my question. Okay. That was my only concern because I'm looking at these numbers stacking up, but now seeing that you're going to use that, okay.
Yeah, that would be a no deal.
That would be a no deal.
Yeah. No, we looked at all that.
And
Yeah, our exit is about 140K a door after 5 years.
okay, yeah, that's very palatable in that.
Which
market.
honestly, on this deal, I feel like, the market is so hot. I don't know, things may slow down next year, but the way things are going here, I mean, we may be able to exit, in the next year or two.
You probably will. I got a deal over in South Dallas right now that came back at a 128 a door just on my appraisal. So I'm like,
Wow. And that's South Dallas.
that's South Dallas.
Yeah. It's crazy, man.
No, great, man. And with the high occupancy, the 59 bill doesn't scare me because you don't have any cast iron that's sitting there cracking with
Yeah.
water going through it.
It's actually very well taken care of. These guys own or operate and they manage it themselves. I mean, they're there on site 2 hours a day, the actual owners. So, we were impressed. I mean, normally when you walk these, after you do due diligence, you're disappointed because you're like, oh, there's disasters here, there's down units. But like, I was super impressed. And I'm like, man, this is exciting because everything that they said was actually true. And there wasn't any surprises really. So.
No, it's good find, man. Because
Yeah, the only other time that happened is when we bought our 850 units in Oklahoma City, but that's another property on a whole nother level. I mean, that it's one of the nicest properties in Oklahoma City for a C+ building, but every other building we've walked, I mean, we've seen it all. We've seen, I won't even say it, but I don't know if I can say that here.
I know what you're thinking.
Yeah.
All right,
I'll keep
Nick,
it
you ready,
clean
Nick?
here.
Ready.
Go ahead, Nick.
Hey, Eric. Hey, George. Solid presentation. I really like the team. You guys have some experience, which is good, and have exited deals, which is one thing that's important to me when I'm looking to invest. As far as the property, it sounds like it's in an area that has some solid kind of economic growth and some developments going around it. So that is good. Alvin hit on my question. I just wanted to confirm that the supplemental was to basically recap. Because I had a few questions about the numbers, but if you're going to recap, I see how you can get there. Kind of similar to the last one, and maybe even more so for this, because it sounds like your target is kind of workforce housing.
Correct.
And so again, obviously it's a short presentation, but I would want to make sure that I look at demographic information that can support, because I think you also had a large amount of 1-bedrooms. And so I just want to make sure, would want to see the information backing up that demo and demand is there.
For sure, yeah, we have 1-bedrooms and 2-bedrooms.
Yeah, and we saw that when we walked the comps. So we always walk the comps at the properties. We couldn't even see any of the units because everything was so occupied. And we went to what, 5 different properties, Eric?
Yeah, the best we got was a video of another unit that somebody had on their phone. But at least it gave us some, it gave us something to go off of.
Okay, and I might have missed, what is the current occupancy rate?
I think they're at 97% right now.
Okay, is there any bad debt?
It's very minimal. Delinquency. They didn't have much. Like I said, they're very good operators. They stay on top of the residents there. So it's nothing that's high. Honestly, it's a pretty clean deal. Normally when you're buying a 1959 deal, the management's a disaster, the ownership is a disaster. It's really coming in there and cosmetically cleaning it up and then, doing those organic rent bumps. So, we're excited. There's not really heavy, I wouldn't call this a heavy lift whatsoever.
Okay.
And by the way, we're going to be using Asset Living to do the management here. They manage a lot of our properties. They have about 100,000 units across the US and they're very good. So they just merged with Citygate or just bought Citygate. So I think Citygate is one of their bigger presence here in Dallas.
All right, and I got to ask you the similar question I did to Vehano. What are the things that keep you up at night that are unique to this? Obviously market conditions and it's an older property, so those are obviously some concerns. But what are some very unique, specific concerns that you have about this deal?
Normally, when we're looking at any deal, honestly, I don't have any concerns about this deal at all. I feel so good about it. Our basis is low. It's in Mesquite, Texas, which I think is a great submarket. It's a clean property. Normally, like when we do due diligence, maybe when we're scoping the lines, I think we found a couple plumbing issues, but it wasn't anything like major. We always scope the lines because you never want a $200,000-$300,000 mistake or more. I think there was a couple plumbing issues that had come up, but other than that, we're pretty good. Even the roofs were good. I think they were replaced maybe 10 years ago. The current ownership didn't replace it. The roofs were on there when they already bought them. But honestly, I think for me, I think the newness of this deal, I think we've never done a loan assumption before, so that was kind of a new process for us. And then we've done a ton of preferred equity, so we were comfortable there. And it was really just getting the underwriting right. And that's why when we think, and this is the best part about when you don't know the answers, be resourceful. Right. So we went to a third-party underwriter. We said, look, this is a complicated structure. We want to make sure we get it right. We want to make sure our investors feel comfortable with this and we're presenting this the right way. We did it in-house and we weren't too sure. And we're like, let's get somebody else to really confirm this. And we did that and it validated what we were assuming. So I think that was probably the hardest part for us on this particular deal with the complex structure, preferred equity and the loan assumption. But I think we got it.
All right, thank you. Yeah, like I said, I think the team is good. Looks like there's some indicators of economic growth, which is interesting. I personally, again, would want to look at the demographics. But yeah, like the presentation, you guys had some pretty good, solid answers and information for a lot of what we threw at you. So good job.
Cool. Happy to answer anything afterwards and set up calls with whomever. That's kind of what, we spend our entire day on the phone just talking to investors, making them feel comfortable. And the thing that I always tell people is, we're getting, like I said during my presentation, we're getting into a short-term marriage. If anything ever happens, George and I were involved in a deal in Houston during the pandemic. And, there was some tough times there, right? Because you're in the middle of COVID, right? But, we rather cut our own arm off before we cut anybody else's arm off. And, we'll put in our own money into deals if need be and that type of stuff. So that's just the type of people we are. We've been in the business for 15 years and, we just like to do the right thing. So you don't see that all the time.
Jennifer, you ready?
Yes, sir. So first of all, I love the presentation, Eric. Pretty awesome layout. I love that. Answer most of my questions. And I think mostly people, I already asked a couple of questions. I just have a few questions about the financing portion.
Yeah.
Could you please clarify what is the expected value when you exit the property? And the other thing is, in your pro forma, do you consider the increases on rates for that supplemental loan? probably you're gonna buy all the investors by then, but I'm a little bit concerned about that.
Yeah, so our exit would be 12.6 million, which is $140,000 a door.
Mhm.
And then yes, we are accounting for increases.
Okay. How much do you guys account for the increase in the cap rate? I mean, in the interest rate?
Well, so we buy an interest cap rate on every single deal.
Mhm.
Oh, well, not on this one. There's gonna be.
Oh wait, sorry, there's a loan assumption, so we
Yeah.
can't do that. Yeah.
I
Yeah,
can't
but-
remember the exact, but I know we increased it from the going rate right now. I think maybe 0.5,
Okay,
but I'd have to look at it.
okay.
Yeah,
'Cause I
typically,
would like to
yeah,
s- Yeah.
that's
I
correct.
will-
Usually 0.5% is kind of what we increase.
And can you remind me the acquisition again?
$90,000 a door, 17,100,000.
Okay. Okay, yeah, I would like to see that and probably a risk analysis. I love the fact that, condition, as Vina said, it was a concern because it's such an old property. But if you're strong as a team, that's something that it makes it pretty great. So I will be looking more into the financing. I like the deal a lot. But I will be concerned about the exit strategy to buying out the investors to meet that goal based on what's happening with the feds right now. Yeah, but overall, I mean, great presentation. I would love to connect with you guys in regards to that financing portion. And I have one more question. I totally forgot what it was. But I guess sorry, I can get to you guys when I find the question.
Yeah, no worries. We can connect after. All good.
All right, good deal.
I mean,
All right,
I tell
thank-
people I don't go to bed till 2 a.m. So I'm available whenever.
All right, so that is the portion. I thank you all again. Now to our next portion is we doing our breakout rooms. All right, so feel free to connect as well. I actually put a survey in the chat. Please feel free to tell me how I can get feedback to make this event better. Thank you all, Sharks. Feel free to reach out to each one of them. And now we'll go breakout room. Thank you. Any questions? Fine. Before we